This is our Forex blog for March 21st, 2013, and what you see on the screen is our currency index. This is the Euro index, Pound index, and like we've done for the last 6-7 years, where we've come up with currency meters to let you see the strongest currencies, the weakest ones, and you simply want to sell the weakest ones like the Euro today versus the strongest, and you want to buy the strongest pair if it's on top versus the weakest if it's on the bottom. The currency meter has always let us do that, but now we can actually see each currency, individual currency, as a chart, and therefore you can see trend lines, fib areas. For instance, the Euro fell off today, and guess what? It made a 50% retracement. Very, very high probability place to look for a sell in the Euro against a currency coming up to 12 o'clock that looks to be strong. Now, obviously, the yen has been trending up, not exploding up, but in a clear uptrend all day. The hourly moving average got held earlier, came down and held again. This is clearly one that you want to buy, and the Euro is one that you want to sell coming up to 12. So it doesn't take a rocket scientist to simply sell the Euro yen coming up to 12. And guess what? Not only does both individual currency charts give a buy and a sell signal, you have a nice pullback off the lows. Our perfect oscillator is at the 80 level, and anytime you have a trend, this is clearly a trend down, if you just simply wait for price to go to and above the perfect oscillator 80, like right here at the close of the bar, and get short, you'll typically find very profitable trades. In this case, it fell about 60 pips, and in this case it fell 140 pips. Again, if you're demoing our software and you just see one trade like this, or two in the case of the Euro yen today, just one currency in a couple hours will actually pay for our software. We sell for $2,000, we lease it for $150 a month, $200 a month with data, or you can also get it for free by opening a live account with FXTD, FXCM, Forex.com, all pari. So again, this is the easiest way that we have to trade, and the perfect oscillator is another method of letting you know when to maybe tighten your stops. You're likely to have a pullback or a reversal at these areas. Notice the market kind of went sideways after that one, bounced after that one, bounced after that one, came real close to it here, stalled, hit it here, went sideways for an hour and a half. Anytime you get an extreme oscillator move and there's no bounce off of it, it's almost 80, 85, 90% chance that it's going to continue down. And again, this was an extreme, and guess what? The price reversed. So let's look for some other opportunities. High probability trades that I would take with my own money. Clearly, the pound has been going sideways earlier in the day. It breaks out above the point of control. This is where most traders have positions during the previous day in all the pound pairs. So it's very significant. Above that, you want to be buying. Below it, you want to sell. Notice the Euro's underneath it goes down. The dollar's kind of chopping around earlier in the day, breaks down underneath it, the trend's down. This one acts as resistance here, and then once it gets above it, acts as resistance or support. It's not able to go higher, it comes down, finds support to hourly. Once it goes back above that, you can see the trend was up. Markets that are stuck between the hourly and the point of control tend to be choppy. You will see this over and over in indexes. So not only does this index method, I think, is the easiest to learn from new traders, it's one of the highest odds winning percentage wise. It also tends to find 20 to 50 pip wins when you're right, and you lose 6 to 10 pips when you're wrong. You also have a ton of break evens, but like you see here on that pound on the bottom, it also prevents you from taking trades in currencies that are likely to be very hard to trade inside of the, especially when they're super close together like that, inside of the point of control and the hourly moving average tends to be a period of choppiness. Let me find, let's bring up some other currencies to let you see that. When markets break out of that choppy area, you tend to have trends. You can see during this area here, chop. And sometimes hourly moving average or the point of control is below the hourly moving average, like the New Zealand here. Yesterday's most traded price in all the New Zealand pairs is way down here. The hourly moving average is here. The daily, weekly, monthly trends up. when this thing kind of went sideways and then broke back above the hourly, what a great place to buy right here. You want to be looking to buy at 4 against a currency that's super weak. Well, we know here's the Swiss. This is actually broke down right here at 4. So you want to buy the New Zealand Swiss. Let's just bring that chart up real quick, and I'm not going to put it on the range chart. The top one's a 5-minute chart, the bottom one's a 5 pips per bar range chart. I'm just going to put it on the top one. 4 o'clock we want to be buying, and like I said, when two currencies both give you a buy and sell signal, it's very high probability, and you can see that this trend went from 78.25 to 7,900, 75 pips. And really, I would have probably got out of this trade right here when it went sideways, bought it again right here. Anytime it's above the upper containment band, and this is above the 80 level, I'm following it like a hawk, and I would have been out right there. I would have missed the remaining 20 pips maybe, just because probability-wise, it wasn't likely to do what it did. But you know, the market always tends to do things like that. Now here's a list of all of them, and let's just highlight again events that happen on any individual currency that's high probability. The Australian breakout here, and notice how choppy it is in between here again. The Swiss breakdown right here. Also, when it breaks the hourly and comes back up and retests it, very high probability. The Euro, when it made new lows right here after going sideways, when it came down to the 15-minute moving average right here, came up to it, I mean, which also happens to be the previous day's low of that index, and also right here, high probability. Dollar, when it breaks down here, when it goes underneath the hourly and can't get, or the previous day's low and can't get above it, this is a pretty decent place that you might have had a loss in and then eventually move down. And the first time it hits the hourly, very high probability. Breakout here, comes down to the hourly, pretty high probability. Previous day's high failure, decent place to sell. The pound, usually the indexes don't break out above the previous day's high unless they hit it the second time or the third time. And anytime you get a double top at a major resistance, very high probability place to sell. And before that, when it's above the hourly and above the point of control, you're basically earlier looking for buys in this one until you got that reversal pattern here. Notice the CAD, previous day's high, failure, and you can draw trend lines underneath the bars, and once that's confirmed, the trend line is broken, very high probability. The New Zealand, when it broke out above the previous day's high, very bullish, and this is typically a place to buy, but it's at 12 o'clock, usually a dead time of the day, but you can see it pretty much went sideways after that. So when you see events in any one individual currency that's likely to make it go up or down, just simply trade it versus another one, like the Australian earlier at 7. Which one was weak at 7? The Swiss. The dollar had just broken out underneath its low, right? So we want to buy the Australian dollar. We want to buy the Australian Swiss. Let's take a look at those. And again, one good trade and sometimes two good trades can make you pay for the software if you are purchasing it for $2,000. Just one day you can get your cash back. Here's 7 o'clock. This one's already above the hourly. I would have, if I was watching this chart, bought it here. And notice again the extreme areas right here. The market stalled. There was really no pullback after that, which again, in my experience in using this, typically the market stalls or pulls back here. If it doesn't, the market's going to go up. And a lot of times what I do is if I see very little bit of a pullback and it hits the lower Bollinger Band on the perfect oscillator, I'll look to get in here on a range chart. And again, I don't have the range chart up on this one. And again, this is the 7 o'clock buy right here, which went up about 40 pips. Let's take a look at the Australian Swiss. Because remember, the Swiss broke down right at 7. Here's 7 o'clock. This one has a nice little rectangle pattern, breaks out, and the market goes up over 80 pips. And because it's above the upper containment band, because of this extreme move right here, I'm going to actually draw my, or put on the range chart of this. Range charts really help you get out when you're not sure what to do or if you see an extreme. Because you can just basically draw very nice trend lines underneath the bar's lows, and typically if it breaks down underneath there, you're out. So I would have been out right there. That breakout was around 40. I would have been out at 70. It's a 30 pip profit. And once it makes another wave up, you wait for a little bit of a pullback, nice pullback right here, and you would have probably picked up 15 pips on that one. But again, the indexes make it crystal clear what to do in these currencies. Like the pound right here, very likely to reverse because it wasn't able to get above the previous day's high of the pound index. So which one's likely to be strong at 7? You see here the Australian, the New Zealand, obviously. The dollar is underneath its previous day's low. The euro's down there. You wouldn't want to buy those. At 7 o'clock, the yen is still above its hourly. So again, looking for a sell in the pound yen. And again, the yen can go sideways. If the pound's going down, the yen's going sideways, you will make money in the pound yen. If the pound's going down, you see another currency going up, like the Australian and New Zealand, you'll make more money. You'll get more pips. It's that simple. But only one of them has to be moving. If you see one that's above its hourly or above the previous day's high, it's not likely to reverse unless there's a certain pattern that you see. So again, we're going to look to sell the pound yen. And the yen doesn't really look super bullish, but it is above its hourly, and it's not likely to fall until it goes below the hourly. If you are short this, and this one's also falling at the same time, watch the chart like a hawk, use a tight trailing stop, and as soon as the trailing stop gets hit, you get out. But we want to sell the pound yen, we want to sell the pound Australian and pound New Zealand. And I'll finish up today's blog with those 3 pairs. And again, if you notice, most of these trades that I've gone over today all worked. So again, you can pay for the software very easily in one day's trading. This was at 7 o'clock right here in the pound. Notice at 7 o'clock on this chart here, we have a double top here. It was never able to really get above. It's actually a triple top. And the only thing that would have made this trade better is if this perfect oscillator had worked its way up there, or even had hit the upper Bollinger Bands, which is sometimes lower than the 80 level. I would have preferred that. I probably, this was very choppy today. I would have probably gone short right here, and that trade didn't pan out, and then did a retest right here. Nice little pullback, found resistance at the hourly. This one is above the Bollinger Band. It's very close to the 80. This trade here, did work, and it fell 50 or 60 pips. So let's take a look at the pound Australian. Coming up to 7 o'clock, we're looking to sell. So this one had exploded up, pulled back, came up again. First thing you notice is I made a lower high. The perfect oscillator was not able to get to the upper Bollinger Band. And so you could have gone short there, or if you really want to wait for some confirmation and pull back a little bit more, you would have expected a move that shot up like that to continue, and it's not able to, and it breaks down right here. Here's your first profit target. You don't know that the hourly is not going to hold support. You're typically going to look to get out right here because it's very close to the, it did hit the lower band, and it's very close to the 80 level. And the fact that it didn't bounce there when it breaks down right here, you have another trade to the lower band, which is also good for about 40 pips. The pound New Zealand, remember, we're looking to sell this at 7. This is a higher probability trade because look, the price is underneath the hourly all day. And so here's 7 o'clock. The only thing I don't like about this is already at an extreme. So I might have taken this trade. I would take a smaller lot position right here because it's at an extreme, and I'm going to put my stop. As soon as it does fall, I'm going to put my stop right here. 5-6 pips, very tight. Sorry, I got a phone call. I kind of forgot where I left off on here, but again, we know that the pound was likely to reverse at 7, and then New Zealand was one of the stronger ones today. And the only downside of this trade, again, is that the perfect oscillator shows it's at 7. No tool works 100%, but I think you'll find the perfect oscillator because it doesn't have periods. It's all based on statistics, past volatility for different times of the day. During low volatility, the perfect oscillator uses totally different statistical information than during the higher volatility periods. The Bollinger Bands are based on whatever is going on today with the perfect oscillator, and the moving average is in the middle. Typically also the moving average can be used to decide where to trade. If the moving average is underneath the 0 level, then you're definitely looking for sells. And in this particular pair, you can see that that pretty much occurred right here. And from that point onward, you're really looking for sells, even back to 4 o'clock. This is an approach that I use in trading, but I haven't really discussed it too much. We actually use our digital signal processing based moving average on the perfect oscillator, and then from that digital signal processing based moving average, I create standard deviation basically Bollinger Bands around it. And so the moving average is super fast, and that's why these bands are extremely good. If you know the trend, or you have a likely direction for a trend, you never know ever in Forex, but if the trend's down, like in this case, you can sell when the perfect oscillator hits the upper Bollinger Band. So notice those 3 instances after 4 o'clock, you get this move down right here, you get this move down right here, and you get this unbelievable move down right there. Now once it hits the lower containment bands, like I've said thousands and thousands of times over the last 5 years, this is one of our earlier tools, but it was a genius tool and we still use it. We did make an improvement to it a year or 2 ago when we used digital signal processing based moving averages. This one is a standard hourly moving average, but you can see the bands are not equal distance around the hourly because I'm also using a digital signal processing based hourly moving average in the middle, which I'm not showing on this chart. If you want to see that, you can just change that on the chart. I prefer not to see it. You can see I have the digital signal processing here in the center line. I made black, but if you wanted to see it, you could certainly put it on there. And the hourly digital signal processing based moving average is very fast compared to the regular hourly, which makes our containment bands much more accurate, both on here and the Bollinger Bands off of the perfect oscillators digital signal processing based moving average. It's very quick, very responsive, and as low a lag as you can possibly find without whipsaws. Notice the moving average went back above right there at 11, and so at 11 the trend's up. So you're buying this right here. You might have bought this pullback right here. There's not the best trades in the world, but all 3 of those worked as well because the moving average. And when the moving average is chopping above and below, it's actually a lot less accurate. So I'm not sure if I would have taken that last trade, but regardless, the trend was up. It was at the lower band right there. Because it found support right there and immediately reversed back above the moving average, you might have taken a smaller lot size trade there.